Thank you for joining us again. Sorry for the delay in starting this final session of the second day, as well as the Mercom Solar Summit for 2021. And this is again another very interesting session on project financing, solving the jigsaw puzzle. So we have saved the best for the last, and we have with us today Mr. Hitesh Paliwal, who is a senior VP and zonal head, North Zone, Corporate Banking Group at SBI, State Bank of India. We have Ben Fraser, who is the CFO of Euro Future Energies, and we have Martin Lux, Dr. Martin rather, head of energy team at KfW Delhi. And Mr. Chintan Shah is not able to join us today due to some commitments. Let me just give you a brief idea or a background of where we are. So we track the global funding and M&A activities from our holding group, that is Mercom Capital Group, and according to the Mercom Capital Group's report, the year 2020 saw investments to the tune of $2.8 billion, right, flow into the Indian sector, which is a 66% decline, of course, compared to the 8.2 billion invested in 2019 due to the pandemic. Of the total investments in the year, utility scale projects witnessed an investment of 1.19 billion. While rooftop projects saw an investment of 356 million, there were no investments into manufacturing this year. The 2020 that I'm talking about. So moving on, renewable energy attracts major foreign investments. In 2020, the FDIs in the renewable energy sector decreased by half due to the COVID pandemic, as I mentioned. And but we expect the funding to get back on its feet this year. Again, here are some of the major non-banking financial institutions, as well as major foreign funding institutions, as well as Indian banks that have been very active in the project financing for the Indian solar sector. So moving on, let me first bring in Mr. Dr. Martin. What are the challenges developers face currently, when raising project financing? Or, this is for Ben, sorry. What are some of the challenges developers are facing when it comes to project financing?
Okay, all right. Thank you, Priya. Thank you for the chance to basically give a couple of comments on this issue. Right, so yes. If I just limit myself to two main challenges we have, of course, in India, and we're speaking on behalf of HFE. So we've been doing a lot of our project financing with domestic lenders. And so, one simple fact is just that the pool of domestic lenders engaged in sort of capitally intensive infrastructure projects, especially renewables, is not enormous in India. This means it's quite easy to use up credit lines relatively quickly. So that's one issue. That said, it's not all challenges, and those that we work with, we work well, they understand us well. Certainly when it comes in terms of, tenor of lending, and if we want to borrow, say, 85% of PPA term, that's fine. But basically, we accept that those lenders are, they've got credit lines, and that they're not out to infinity. So that's one challenge. I guess another challenge is from the commercial side. So clearly our interest cost is a key driver to our competitiveness. So as we all know in the market, it's a very competitive market at the moment. We've got a number of players coming in from overseas, some of them with access to cheap funds overseas, and in bidding scenarios, of course, they're able to participate very well. Maybe because of their funding, their expectations of returns might be somewhat lower, and of course that keeps us on our toes in terms of remaining competitive in tenders. Now, probably we find that when we're starting projects, getting project finance is a bit of a challenge to get our interest costs down And interest cost is, it's like any other cost, like cost of modules, etc. It's a bit of a challenge to get that down to keep ourselves competitive. So I think those are two kind of main challenges I'd like to flag up. I don't want to go on with too many. I think probably to add on to say we've got those two challenges, where does that tend to push us? It tends to push us, like others, to look overseas for funding. So recently we have, we've gone overseas and done a bond, which of course is very useful for getting funding in probably at a cheaper rate. But of course it has issues with it as well. So probably not so easy to get the good tenor borrowing. And also there's the foreign exchange question. So there's the hedging to be done, and that's going to cost. So it's not quite so simple. But I mean that is there, but that's part of the way we're addressing the challenges that we have. And then if I won't go on too much longer. If I add on a couple of things which I would like to reduce or magic away, if I had a kind of wish list and I was able to do so. One thing is, I think if we take finance domestically and then we move to refinance internationally, or we're looking for a cheaper rate, of course we have the bugbear that nobody likes, at least from a developer point of view, in terms of prepayment penalties on those costs. So that's something which we find a bit of a challenge. Another element which is probably a bit of a challenge is penal charges tend to arise, I think, for all developers. We're not alone in this. It's not always as easy and straightforward as it at first appears in terms of getting various things that need to be done to avoid penal charges. So creation of security around land, etc. That's a bit of a challenge as well. I think that really summarizes the main challenges. Possibly, if I say one more thing, is just on the interest cost. If we were to be, if renewables was categorized as a kind of priority sector like agriculture, you might find that somewhat easier. I think we appreciate that some lenders might find it somewhat easier to provide us with better rates. I think that's all from me.
Yeah, I agree with you. I think that is what the industry has been pushing to, have solar in the priority sector lending, as well as extend that, the amount of funding also that is considered for priority sector. And I agree with you. I think throughout the few sessions that we have had yesterday and today, the discussion has always been around the developers having access to low cost debt, especially from overseas, are the ones who have an edge over the developers here who depend on domestic debt. I agree with you. So we have, Hitesh here from SBI. So, Hitesh, you can correct me if I'm wrong, but according to the developers we have been speaking to, SBI has been keeping a low key on renewable financing. And is that true? And if so, why? And because you were one of the largest lenders to the solar sector earlier.
Yeah, Priya, good evening, Ben, good evening, Martin. Thank you for giving us an opportunity to express whatever the reservations or whatever the talking points are there from the developers of the fraternity. As Priya, that you are pointing out that SB is keeping low key on the financing renewable projects. I think the notion is not correct. Let me tell you that as far as numbers, we can see that from last 2-3 years, the gigawatt addition that we are foreseeing in the Indian economy, that is to the tune of 6 to 10 gigawatt on an annualized basis. And if you see the capex creation on the capital basis, it would be whatever. This is the per megawatt cost of a ballpark number of 3 crore or 4 crore. So I would say that if you count, because with the onset of this year, we are counting our numbers for last year within this geography. So let me tell you the numbers on that we have on record for this year in this geography, that is 5,776 crores. So even if you count the capex addition on an annualized basis, I feel that we are contributing to the extent of maybe 30% or at least 25 to 30% in overall capex creation as a lender, and as a linchpin in the entire industry. I think we are contributing well. Number two, if you see that the overall SBI composition of the power asset, it is to the tune of 3 trillion in INR. And if you see the energy mix in the industry, so far renewable is commanding around 11%. So I can say with pride that SBI is holding asset book in the renewable, which is over and above the energy mix which is there in the economy. So I think we are at par or even better than that. And as far as commercial, as far as staring at the project viability, servicing our customers, I think we are giving them all bedrock support, and with a clear I think with clear vision that we have to support our customer in an approach of the bank like customer first and first in customer satisfaction. So I believe that if anybody has that kind of reservation or that kind of notion that SBI is keeping low key, I think I would give them all free willing that they can call me directly, and I will try to attend them with all efficacies.
Definitely, definitely. So, if I may ask, going further, what was the, solar, specifically for solar, what was the outlay in 2019 compared to 2020, if I could ask you that?
So if you take you from my earlier statement that economy is having addition to the tune of 6 to 10 megawatt gigawatt on an annualized basis as far as solar is concerned. So whatever the capex is required, SB is very well equipped to the extent of contributing as far as headway is concerned of the balance sheet that we can further bank on the renewable asset. So that you can see that we can contribute for a forward-looking capex for a year for annualized basis to the tune of 35 to 40%. So this is the headway which is available on our books, and we can easily take our exposure. Although there are food for thought, but still I believe that solar is better off as far as wind is concerned, because a lot of capacity addition, whatever is taking place, it is more on solar. And considering uniformity of the radiation, GHI, and the particular geographies, so I think we are quite positive. And within this geography, I think we have tapped all the big customers because 40-45% concentration of the developers in the country is there in the Delhi or the vicinity. So we have tapped each one of them, and still I am open to acquire more, and we have headroom available for that.
Mm-hmm. Okay, that's interesting. Dr. Martin, as an international development bank, what is your criteria or restrictions to lending to solar projects?
Yeah, good afternoon to everybody. Thank you for the invitation. KfW, as a government-owned bank, has a clear mandate in financing sustainable and development-oriented projects, not only in Germany, but as KfW Development Bank, also all over the world. So these are the main criteria that we apply for all our projects all over the world. They have to contribute to sustainable development goals. And here in India, I think we have a very specific case that almost all our portfolio, I say almost, not everything, needs to contribute also to climate mitigation and climate adaptation goals. So when it comes to the energy sector, main part or almost everything that we invest must have a concrete contribution also to CO2 reduction or adaptation to climate change. And we want to contribute clearly to the Paris Agreement and what is stated there, and logically in the long run also to net zero economies all over the world. We as KfW Development Bank work mainly according to our mandate through government institutions. So we can finance directly, and we have done already projects of state-owned enterprises like Mahajenko, WBECDL, for example, to give some examples. But we also can address the private sector through credit lines that we have with financing institutions like, for example, SBI, for example, IRIDA, REC, or Bank of Baroda, where we set up credit lines or that then can directly finance or indirectly finance also the private sector through this beneficial loan conditions. What we as development bank always need to have and want to have is additionality. That means when we as KfW involve ourselves, there needs to be a value added for us as a public bank, as a public development bank. And we do not want to take over responsibilities where already the private sector can easily do its job. Yeah. This is really in sometimes also the case already in the solar sector, where we can say, well, if the private financing sector can do this on their own, there is no value added, there is no importance for us to be there, but we see that it is very important to be there still, especially when it comes to promoting social and environmental criteria, when it comes to promoting quality in the implementation of solar projects, where we as a KfW development bank logically want to promote also these standards and make sure these are adhered to. And there is where we also need logically then the understanding and the support of financial intermediaries, like, for example, SBI in this respect.
Okay, that is interesting to know. And moving on to Mr. Ben, are you I know the developers face various challenges in the sector, which is one of the reason I think the cost of debt is also high, because they also factor in the risk that is involved in the projects. So when we're talking of risks, are you getting paid on time by the discoms, or how is the discom payment, delay affecting your credit history when you go to the lenders to ask for financing?
Okay, thank you, Priya. Yeah, so that's a very good question in relation to discoms. So as is well known, I think, probably the best way I can put it is discom payment is not regular. It obviously differs from discom to discom depending on their own individual circumstances. So I would say it's not across the board. It's a mixed bag, but certain ones seem to go through patches, sustained patches, where the receivables build up. Now, it's an issue. I don't think I can say that it. Perhaps it's not quite right to say it affects kind of our credit history, but it's something that certainly comes up when we're looking for finance. So as we've been looking for finance, recently, if we're looking at talking to bond investors, when we've had conversations with them, every single time, the question that comes up is, what's the pattern of receivables? At what speed are the discoms paying out? And in particular, they zone in on certain states and say, oh, this state has had a particular issue. Well, that's we understand that state's in inverted commas good state. So we always get that question, and rather than I think saying it affects the credit history, I think they're just aware that it can affect the economics. So what they're looking for is some form of mechanism in the form of the borrowing, so that they're anticipating there might be some delays. And maybe there needs to be some sort of working capital facility in place, which could maybe address that in the short term. But they also, because there's basically unpredictability, even though there's been financial restructurings, clearly there's been government support given to the discoms. They're aware that it might come to the point where the promoter, essentially the holding company, has to put funds in basically to tide the SPV over for a period when it's still got to make its principal and interest payments. But maybe the collections haven't come in time. So it's not. Don't think so much that it affects our credit history, but it affects the economics of the projects, and they're aware. And so basically, it leads the investors to lenders to ask more questions about, outside of the project economics. Have you got the wherewithal to support the project? And basically, just creates more questions. Fundamentally, I think most investors are probably still looking at discoms saying, ultimately, is it like basically quasi-government risk? So maybe there's delays, but in the end, you will get paid. But it leaves that question.
Yeah, I agree with you. I think that is what most of the developers feel also. And Dr. Martin, you have been into developing countries across the world. How different is the scene in India when it comes to compared to other countries, and what are your observations? what does India do well, and where can we have the learnings?
Yeah, maybe first of all, coming a little bit to the downside and what Ben was saying already. What I have seen also in other countries of this world is that you have, for social reasons very often, and for political reasons, you have distortions in the market that government promotes for certain reasons, but that lead to strong distortions and to strong obstacles in developing the energy market. I think that is what I can say that we have seen also in many other countries of the world, the smaller and the bigger ones, and that actually also the regulatory framework for really promoting sustainable energy development and renewable energy development is not always, let's put it like this, perfect, and lagging behind what we really need in order to reach these high targets that we have to achieve in order to accomplish our promises to get net zero development at a certain point in time. What I see, the big difference here in India is the huge size of the market. I think that is something that you will not find in many other countries, especially developing countries of the world. Also, the relevance of India for the rest of the world. What are we doing here? What we are doing here really has an impact for the rest of the world. I think that responsibility, that challenge, and also this opportunity needs to be always taken into consideration by the government and also logically by the private sector itself. We see here in India that there is a development also as an own local domestic industry that is raising, that you will not find so much in other developing countries, maybe especially in Africa. And we have a really fast growing economy that puts challenges in terms of the power supply that we need in the future, and that needs to be developed also climate neutral and climate friendly. What we see here, and let me put it like this, I am also quite new here. What was surprising me is the extremely falling prices that we hear, the high, as Ben also mentioned it, the high competition that we see in the markets, and where I would, where we see a risk also that this also might lead in lack of or underestimation of quality, of sustainability, of social criteria, where the developers themselves sometimes do not have really an option because they have to compete in the market, and where we also see a challenge in the future. Maybe I just finalize by this, but pointing out that really India is such a market that really can tip the balance worldwide, which also contributes to challenges, opportunities, and responsibility here in the market.
That's very well said, Dr. Martin. I think you have laid it out so well. I think we have an opportunity and a responsibility, because, like you said, India is one market where everybody is watching us. You're very right on that side. Yes. So, Hitesh, what is SBI's renewable energy financing plan for this year and next? And what is the amount that has been set aside for renewables, especially solar? And how can lenders align with countries' goal of installing this 100 gigawatt?
So I think we have covered to the extent in the last quiz also, like the way you have asked me. So I can say that we have enough headroom available, and that can feed to the extent of 35-40%, whatever is the power generation, the project capex which is slated for medium term, we can say for 1 year. So we have enough headroom available. As far as sector is concerned, we are positive on solar. Vis-a-vis, if you see that solar is supplanting most of the conventional energy resources, the energy mix, solar is increasing year on year. So in fact, to attain 100 gigawatt solar, which is the ambition of this government here in India, so I think whatever the capex and the capital formation which is needed to plug, so I think we are well equipped for that. And as a sector, we are quite positive on that.
Okay. Okay. Ben, this is for you. What suggestions do you have for the government and lenders when it comes to renewable financing, and what innovative financial instruments do you suggest? Are there any ideas from Europe or US that we can borrow?
Okay. Yeah, I think, essentially, this is from our point of view in the industry. We're quite we're a simple industry. We've obviously got great ambitions and a lot to do. There's a big task before us, but we don't really want to overcomplicate things. So in terms of specific financial instruments, I don't think we really feel, any great need to overcomplicate things. I think in terms of what we ask for, maybe we ask more from the government. I think the lenders, we ask to understand our situation regarding things like prepayment fees and penal charges, and understand the challenges we face. But I think there's a lot of empathy with the lenders. I think we understand where they're coming from. They understand us quite well. And so we just ask them to, I think, continue the understanding that they already give us. In terms of the government, the government has made, it's basically committed to certain targets, quite a lot of achievement in terms of where the renewables industry needs to be over the next few years. I think it just needs to carry on supporting in the key areas where it's clearly trying to. I think regarding, you already hit earlier, Priya, on the discoms issue in terms of getting those collections in on time. I think it continues to give that support. I think really needs to carry on giving that support, but also improve some visibility. So at the moment, support comes in, but we don't always see the result come out within a fixed timetable. So that's one issue where there needs to be a bit more movement. I don't know exactly how it's to be done in terms of the discom discipline, and it's tied up with their economic situation. But that's one. Another one I think is that makes it easier on the financing side. I think when we do have competitive bids and where we have tariffs awarded, I think it'd be helpful. If all are aware that tariffs are tariffs, and once there's been a bid, the tariffs are set, and they're not to question, which can occasionally happen. I think probably lastly, from the government side, we do look for some support regarding, I don't know if bureaucracy is the right word, but there are a number of procedures I think that could be streamlined. I think I mentioned earlier around the creation of security over land, particularly in some states, and there are some other kind of approvals and things that need to be required. Some streamlining there would also help the industry. So I think mainly we're looking to the government to continue what it's trying to do. Realise obviously the circumstances are difficult at the moment, but hopefully as we move on and move away from the pandemic, etc., government will have time and resources to devote itself to this, as it has done in the past, more effectively. I think lenders we see understand us. They would benefit, of course, by renewables being categorised as a priority sector, as I mentioned earlier. That would be a great help to everybody. And I think that's it. I don't think we're looking for a kind of some clever kind of financing. We're not looking for anything over sophisticated. I don't think that's necessary. I think we're moving in the right direction. Just needs a bit more of a continued push. That's all.
Right. Okay. So, Hitesh, I will put the question in another way. Probably, as a bank, what are your restrictions to lending to renewables? What is it that triggers a red signal? And what are the technical challenges, and how do you think they can be addressed?
So as far as I think it is better that we monitor it as a matter of prudence rather than challenges as a lending institution, and we should be comprehending the risk in such a way that we should be whatever that we are banking on unseen, so that should be comprehended well. So as I think we have started discussing in the forum itself, that the counterparty risk is very critical, and we see that whoever is the off taker, it should have an impeccable track record. Secondly, they should not renege on their PPA. So like in India, there are 41 utilities, and they are graded different, like in the power ministry rating also. Some few discoms are rated A plus, some few are A, then few are B also, and few are C also. We have seen a lot of gyrations as far as the repayment track record is concerned. Sometimes they were repaying on their obligations on time, within 60 days and 30 days, whatever is committed with the developer. But sometimes they are still, delaying their payment to the extent of 12 months or even more than a year. So those gyrations has to be plugged, and that has to be attended by the respective ministry or whoever are the sitting at the saddle. Number two, as the PPA rates are coming down year on year, so the major bone of contention is that no discom should renege on their PPA with the political stability or instability. So that is also one of the challenges. Third, I believe that as a bank, State Bank is not acquiring the asset to sell. Means whatever we are onboarding the assets, we are taking care of them for whatever the tenor is, whether it is 15 years or 20 years. So it is our baby. So we feel that the project which has a resilience and the modules which are deployed there, so the degradation factor, because it is a long-term financing ultimately, and the degradation of those modules should not create stymie on the generation. So generation should be at par with the expectation in sync with the PPA, the norms of the PPA which the developer and the off-taker has bilaterally agreed for. And basis that also we have envisioned our financing. So this is point number 3. And point 4, as I think Ben was also pointing out, that in few states, we are also forcing a lot of challenges in terms of, the grid availability, the perfection of the security and all this stuff. So I think that should also be plugged and should be attended well. And it is a ultimately systemic risk. And the first loss which is there with the developer, and it will be subsequent to the financer also. So these are the challenges, and if they are aligned, I think we are very much keen, and in a way, wherever we are foreseeing that those challenges are ultimately plugged, we are with all efficacies, we are funding those assets, and in fact, developers, all of the developers, I think they are very much okay with the efficacies and the turnaround time that we have seen in State Bank of India.
Okay, that's interesting. And Dr. Ben, for you, do you finance projects that mandate domestically made components? And if not, why? And what is your suggestion for the government that is pushing for domestic content requirement in solar projects in the future?
This question was to me, right?
Yes.
Yeah.
Oh, sorry, Dr. Martin. Yes. Yeah.
Okay. Yeah. Maybe I make an initial statement. I think I strongly believe that the Indian government has all the right to promote and develop local markets, local production, and local economy. Just to say this clearly. Still, what we see is that there will also be very often this kind of trade-offs between these policy objectives that you have, the already mentioned market distortions that you have, and the optimal utilization or allocation of funds. And here is where we see a great risk when it comes to being very restricted in terms of not allowing international bidders, not allowing international products to come into the market. We might not get the best results in terms of quality, quantity, and in terms of proper allocation of the money that we as KfW and also the Indian government gets from the taxpayers. So in terms of overall allocation and national economic point of view, I think we should be very, very careful in too much promoting domestic production. And we as KfW, we have the mandate, we have obliged to follow international standards when it comes to procurement. And we have to make sure that there is a free competition, that there is transparency, efficiency, and effective procurement rules. And there is where we, in many cases, have problems to finance respective projects. I think that is very clear, and that is becoming also increasingly a problem for us. So we have to analyze these conditions in each and every case, and we have to see if we can do our financing under these conditions still, always securing that there is a really best use of the available resources. And so, yes, we have to adjust also here to the restrictions in the market, but we are really in difficult waters sometimes when it comes to this, and we would be very happy if there would be more openness for us also. But still, I want to repeat that there is a trade-off in this, and we all have to live with it, but still, in terms of best allocation of the available resources, I think it is better to really let the international competition do their work, and by this also facilitate that we really reach our very, very ambitious targets in terms of increase of the renewable energy in the overall grid mix. And what we see is that also when it comes to the local and national production capacity, that might not, or that will by no means be sufficient in order to really get these achieve these high set targets.
Right. So yeah. So you see restrictions in, financing really completely module. I mean, the projects that are completely into domestic, procurement.
Yeah.
Yeah.
Mm-hmm.
Okay.
And there's logically other measures that also lead to to problems on our side, like price matching and all these measures where we, as an international acting agency, have really our problems, have really our somehow requirements, and I think we have them also for very good reasons.
Yes, I agree with you. So, as one last question, I wanted all of you to ask if there is a one bold prediction that you can make about the sector. What would it be? Ben, you can start.
Okay, thank you. So a bold prediction. So maybe a bold prediction, but not completely unexpected on behalf of HFE, where we're sitting and what we're trying to do. So we, being optimistic, I think obviously there'll be somewhat of a recovery economy-wise after we come out of the pandemic. I think the general mood at the same time as recovery is, I think people appreciate more, the need to be sustainable, the need to kind of be green, etc. I think there's probably greater empathy with the push to be towards being carbon neutral and various different targets that the Indian government, amongst others, have signed up to. I think we'll see more of a push for renewables, particularly in India, to be an even bigger part of the sector. I think we'll see various cost drivers bringing the cost down. I think Martin mentioned the kind of domestic supply. I understand his concerns on there and what he's saying, but also, if we can look forward to more modules, etc., more quality modules made in India, I think in the medium to long term that can only increase competition and be good for costs. And I think the government will continue its work in terms of the, on the regulatory side, in terms of making things easier. Some of the issues that we've mentioned earlier and Hitesh mentioned. So I think everything is pointing to, a bright future. So sort of my prediction, not so much prediction, but just a very optimistic expectations that we as the renewable sector, particularly in India, have got the conditions, more or less right and getting better, and that we're moving in the right direction to look forward quite positively.
Yeah, that's good. I mean, that's everybody is hoping for that, I would say. Whether it is the international suppliers or the domestic developers, all of us are waiting for a better condition in the future. Hitesh, what would be your bold prediction, if I may ask?
So I believe that the way things are panning out in the industry, lockstep with the industry and the expectation of the global forums like ESG compliance will be very much imminent for the developer as well as for the lenders. Because ultimately it will be a long-term financing for 20 years. So environment, social governance is a must criteria. Number two, the merit order dispatch. This will prevail. And I see that the renewable is always cheaper than the conventional sources. So I believe that in the medium to long term, within this decade, I think in India, it will supplement to the extent of 50% as far as renewable generation is concerned. Number three, on the financing side, we will see a lot of evolution as far as the mobilization of the funds are concerned. We have already seen that InvITs have come. We have seen SPSE route, SPEC route has come, and
Yeah.
green bond and many other routes. And as one of our panelists was also pointing out, that the priority sector classification of the renewable project may also come in times to come, because ultimately there is a buzzword around the green economy, the clean economy, the green capex, carbon free capex. So likewise for the lenders also such concept may arise that there will be a green capital, green balance sheet. So maybe we will also get that kind of square with guidance from our regulators or from our parents, that it should be a capital which should be plugged for the green kind of economic creation and green kind of capex creation. So I believe that still considering our fulcrum around of the solar, so solar has all bright prospect, and I think to medium to long term we will see a lot of activity razzle here, and this is what I feel for this sector.
Interesting. Dr. Martin, what would be your bold prediction for the sector?
I don't know if it is so bold anymore, because I think Hitesh has already addressed many of these aspects.
Yeah.
My bold prediction is that with the increasing share of solar and renewables in the grid, we will have, especially in terms of renewable energy grid integration, further efforts to be implemented, and that's where we will need future investments, and as well when it comes to how to do the storage, how to do sector coupling, how to flexibilize, how to stabilize the grid. And here is where I'm strongly convinced, I'm really convinced that we also will need new financing mechanisms. For example, green bonds, but also other green financing mechanisms that need to be further developed, amongst others. And that is also something that I like to say boldly. I think we have to, and we will have to, and we will also think of how to finance coal exit, because this is also a challenge, and how to combine it with the further increase of solar and renewable energy in the grid. That's where we need new financing mechanisms, and where we as KfW are really happy and looking forward to work together with everybody who is thinking in the same direction, and who would be in a position to work together with us.
Yeah, that's very great. I mean, I think that is the expectation from the market also, to have, a better financing opportunities, because that is the only way you can drive renewables, or have an opportunity for the procurers to go for solar, because if climate change and the consciousness doesn't work, then the price has to. Right. So project financing plays a very important role in this. And I appreciate all of you who have made time to be here, share your thoughts with me. It is very important, because we, in this forum, we have seen a lot of interest, and many of the questions that I have posed here today also is coming from all the people that we regularly speak to as stakeholders. Whether it is the lenders, the government, even the developers, manufacturers, and also international suppliers and vendors. This summit itself, this is the first time we are doing on a virtual conference, but summit itself has shown so much of interest. We have, I think, even now at this time, a lot of attendees who are in the panel as well as in the lobby, also finding out what is happening. And this is one responsibility that Malcolm has taken, to bring a lot of stakeholders together in front of the audience, including the government. And I really appreciate all of you, and a lot of people have heard you today. I can say that, and thank you for taking this time, taking the opportunity, and being here today.
Yeah, thank you,
And
Priya. Thank you, Martin. Thank you, Ben.
Yeah.
Thank
all.
you very
Thank
much
for
to
the invitation,
everybody.
Priya.
thank you. And to all the attendees, this is our final session. And thank you for making it a huge, huge success, much more than we ever expected. And I personally thank you, and the whole Mercom team. Thanks all of you who have attended all the sessions, participated here, been in the platform, and I owe you a big, big thank you. And stay connected to Mercom. We are always here with our research reports, with our news and analysis, and I really appreciate all the presence and the participation that you have shown, and the support you have shown for Mercom. Thank you.